Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Wednesday, the 7th of December. You know, every Wednesday we do our MarketClub TV show, like a full 1-hour show, live. Very, very nice setup. You can call us at 410-867-2100, extension 129, leave a message for us, or you can actually email us at marketclubtv@ino.com and leave your questions in the mailbox, and we'll do our very, very best to get them on air tonight. But we also have some prizes tonight. We have a new intro that you're going to really enjoy, and we'll be covering a lot of different markets. Lots going on, kind of like under the seams through here that we want to follow, and we'll track that tonight. But let's go to the markets as we normally do. And before I go there, I want to just say this. Don't worry about Europe. Here's one stock that has it all. We'll be covering that stock in just a moment. For the past several months, the market has been fixated on what's going on in Europe. While that's an incredibly important element in the global picture, there are still many markets that are offering great opportunities both here in the States and overseas. One of the easiest ways to find winning trades is to use MarketClub's SmartScan tool, and that's available to all MarketClub members. We have demonstrated this tool time and time again on the show, and it continues to find excellent trades both in stocks, futures, precious metals, and Forex. Today, in addition to the regular markets we cover, we will be looking at a couple of interesting stocks that I think you'll find could fit into your portfolio in 2012. Now let's go to the charts and the video and see how we can create and protect your wealth for the balance of the year. So I'm going to go right to the portfolio, and here we are. We're going to be starting with the S&P, which is a plus 70. Now this market is back up towards the high end of its range. You can see it's come back. It was down a little bit today. It's come back. It's still a little bit down from the opening, but nonetheless, it's really kind of up there. And we're sort of seeing at the upper end of the range here. You've got a couple of things going. You've got the long-term monthly trade triangle, which is negative. The two other ones are positive, indicating more of a trading range. So you're up towards the upper end of the Donchian trading channel. I think we're going to chop around for a bit, but the big thing is 1300. That's a big number to go through. We've talked about this in our previous shows, so really pay attention to that. And looking at the other markets, we're going to go right through these because I want to get to the others pretty quickly. This is silver. Everything's red, minus 70, basically saying that the trend is down, and it's really gone nowhere. A little disappointing both for the bulls and the bears. In fact, you go all the way back to September 25th, and this market's really stayed within a pretty tight range between 36 and 30. So I think you just want to give this market a pass until probably 2012. Much the same is going on in the gold market. The gold market is actually up on the day. It's different in the sense, longer term it's still positive, shorter term in the weekly and the monthly negative, indicating a more of a trading range with a plus 60. It means it is a trading range. And how you use trading ranges in MarketClub is to use the Donchian trade channels and also the Williams percent R. Once you get the Williams percent R indicator, which is what we're looking at right now, is an oscillator, which means unlike a trending tool like the MACD, which is down here, this market tends to go to extremes like minus 20, minus 80, and so forth. When it gets to those extremes like up here or down here, it's usually going to make a turn, but you're waiting for that turn to happen. So right now we're sort of not in an overbought condition, so I think we may just be chopping around here for a little bit before we get too excited. But certainly the big number there is 1800. We talked about this yesterday. 1800 on the top side, around 1650 on the downside, but the market tends to stop at big numbers. I think that's just one of the histories of the gold market. Here's like $1,700, stopped there, boom, 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 came back up and so forth. So going to our next market, excuse me, and that's copper. Copper, as you can see, for the past 6 days has gone nowhere, and that's in a plus 55, indicating a trading range again. Now we do have an overbought condition on the Williams percent R, but we haven't got we don't quite yet have a really conclusive proof this market's going to come down. So it's largely reflecting the action in the equity markets. As I say, copper is an economic market, but nonetheless, mixed signals, monthly down, longer term down, weekly, short term up, intermediate term up, and short term down. So it's very mixed right now. So I think this is another market you really just stand aside with for the time being. Now this is the crude oil. Crude oil is really much the same. It's gathering momentum or strength over the $100 a barrel level. It's been there now for the past several days, And I think that's the important takeaway right now. So it's still in a very, very positive mode. You want to be long this market, you don't want to be short. And I think you would like to see this market continue to move higher. It's not good for the gas at the pump, but that's the reality of the supply and demand. I don't know what's pushing this market up, and it really doesn't matter what I think or what anyone thinks. It's what the market thinks and what it wants to do, and that's what we follow here at MarketClub. So going to our next market, that's the dollar index. And the dollar index is pretty much flat for the past 6 days. You can see it's just sort of going flat here. It's moved over the 78.50 level, under the 78.50. The 78 level is a very, very important element here. If it closes below that level, then you're going to see some downside pressure on this index and possibly getting down to this area of support around the 76.50, 77 level, which is quite a bit lower. So we're not quite in an oversold condition, but we're getting there. So let's pay close attention to that. But longer term, the trend remains positive for the dollar vis-a-vis the basket of currencies this particular index tracks. So let's watch that very carefully. Now, we talked about other markets we're going to be looking at, and obviously the Reuters-Jefferies CRB index, which is a commodity index, is still negative. We've been talking about this possibly going down. All of our indicators are minus 100, indicating the trend is down. In fact, this market's lower for the week, and I would not be surprised to see a test of the lower end of the Donchian trade channels around the 305 area, and we're not quite in an oversold condition. So we still have some room there on the downside, and that could be a number of things that could happen. Possibly oil takes a little bit more pressure on the downside, which would push this index down. So going to the markets we want to talk about, I want to talk about three different markets. We talked about the Euronext, symbol NYX, MO, which is the Altera Group, and DHI, which is Dr. Horton. Now, this is why I wanted to look at these stocks. One thing that struck me today is longer term, this is the Euronext, symbol NYX. We have our long-term and intermediate-term trends are up. The market's currently trading at 27.20. Now, you've had a pullback. Now, this is the interesting thing, because if you scope this out even further, you see there's a tremendous what we call an energy base. And I'll just get my telestrator out because I want to spend some time on this stock. That's why we sort of went through the other ones pretty quickly, because there's not a lot happening there. But if you look at this stock, you really have this opportunity in terms of you've got this sort of really a big what we call an energy field. I should think there's a thing there, energy field, and it is building to push this market higher, in my opinion. Now, clearly, we want to close over this area, but we're getting there, but this pullback, I think, represents a great opportunity. And let me explain why I think that's the case. So let me take this off the screen, clean this up. And if we go back, scope this out to just a few months, you'll see, actually, yeah, that's probably 3 months is good. So we can put a Fibonacci. So click here, pull it down. So this is what I want to share with you. So we know the major trend is up, both the monthly and the weekly. Now we are at 27, looks like 27.20 is a 50% retracement. 26.83 is a 61% Fibonacci retracement. Now the cool thing is when you're buying on a pullback, when the major trend is up, you're actually lowering your risk. And let me explain how that would work. Let's say you were to buy at this level here, maybe you're going to buy half a unit here, another half a unit here if it gets down to 26.83. Then you could put your stop pretty much where this parabolic is, and the parabolic comes in today. Let me just turn this off. The parabolic comes in today, let's see, at 26.36. So you maybe have a half a cent risk on the last purchase, maybe less than that. But certainly your risk is very small, and your profit potential, I think, in this market is pretty good on the upside. And let me explain why I think it's pretty good on the upside. So scoping this out further, and we go to the 6 months. I think potentially we could see this market, the low is 22 on this move here. You can see right around here, the low is 21.97, so we call it rounded up to 22. The high there was 28. So 22 from 28 gives you 6. So I think you could see this market quite easily get up to 34, which still would be a very, very nice trade from current levels. And I think that's something to look at. Maybe a 15 to 20% profit potential with a very, very small risk. And that's what we like to see. If we can find those trades, we think they're very, very good to look at. So if you, let me just clink this off the screen, just one second. And if you look at this month, we just got a monthly at 28.85. It's 27.20, let's call it. So you can actually buy it better than the monthly right now. You have the weekly in place, and all you're looking for is the daily. So I think by the time we go into 2012, I think this market could actually be trending up to the 34 area and maybe higher. So let's go to our next market. The next market we're going to be looking at is going to be the Altera Group. Again, this is a market that's in a bull trend. And what I like about this, again, is we're coming from, I'll take these off, we don't need that. And I'm going to take this off too. So it's just very, very clear in just the market action itself. And you can see, again, we've got a really nice energy field here that's being built. You can see right here. And we've actually broken out. If we draw this along here, we've broken out to the upside. We've come back, tested it. I think the market action is very, very positive. I think by Thursday and Friday, this market's trading over 29. Get on board, because I think you can measure it quite easily from, let's say we'll take conservatively the 24 to the 27.50. That's 3.5. So we're looking at maybe 31 to 32 as a target zone. Not a lot of money, but I think it's a very safe bet, and it could go much higher than that. And let me explain why. It could actually go from, let's say, the low right here, let's say the 23 level, up to the 28 level again. So that's 550. So that's 33, 34 on the upside. So I think you could be looking at maybe 34 on the upside. Nice trade. I don't think it should go under 28 again, but we'll see how that works out. But again, this is a very nice formation technically, and it looks like it wants to go higher. And the trade triangles, if we put those on, they're all positive with the exception of the daily. So again, the monthly and the weekly positive. Trend is up. Trade with a trend. The trend is your friend. So let's take this off the screen. Go to our next market. And the next market we're looking at is another one I think will be interesting. It's Dr. Horton. DHI is the symbol. And this is not an expensive stock. It's $12.70. But again, you've got that really nice base that you're coming from. A lot of energy underneath this market right now. So I think if you have a, let me put this on. So this is what we're looking at here. This sort of just drawing this freehand. We can actually have tools. You can draw it. Let me take this off and just draw a tool that we can use, and that's going to be our trend line tool. And just click here, and you can pull this along quite easily. You can see quite easily how it broke out around 12. It's 12.70. I think any kind of pullback in this market, you want to be a buyer, because we could see this market going up to, I think quite easily we could see it go up to 15, maybe $16 a share. So another market to look at in 2012, but put on your radar screen. Now don't forget tonight to watch the show, because we'll be talking about a lot of these different other markets that we are tracking, some interesting ETFs, some big markets that I think will be emerging in 2012. So give us a call at 410-867-2100, extension 129. If there's a market you'd like us to analyze on the air, just leave it a message and we'll do our very best to get you on the air. And please forgive us if we don't. We've got a lot of messages coming in. But also email us at MarketClub TV and at ino.com with your questions, or if you want to look at a particular indicator or market, we'll do our very, very best to get you on the show. Hey, this is Adam Hewison for Market Club. I'll see you tonight at 5 o'clock. Don't miss the show. You'll enjoy it. Have a great day trading.